All right, well, it's Monday, the beginning of a new weekend. Today we're doing technical analysis on Bitcoin, Ethereum. I'm going to also look at Cardano, Litecoin, Chainlink, and a couple of other tokens. Let's get started. Welcome to another episode of Crypto Corner, everyone. My name is OJ, crypto analyst and investor since 2016. Today we're going to look at quite a few coins because we already started the pullback. As you can see, Bitcoin is only 1% down in the last 24 hours, but all the altcoins bleeding much more. Ethereum is down 4.5%, XRP is down 4%, Cardano is down 4%, Solana is down 6%, in fact, and Doge is down almost 4%. You know, most of the altcoins are around 3, 4, 5, and some of them even further. Shiba is down 7%. All right, so we're going to take a look at a few different charts today to establish some target zones on the way down as well as on the way up. I mean, I'm expecting that this pullback is going to continue and it will be a slightly bigger pullback than what we are currently seeing. So let's switch to the charts and find out. One of our sponsors is Token Metrics. I chose them to be one of our partners specifically because I use this website a lot in my marketing analysis and research. If you want to know where is the right time to enter a position on any coin or token, and more importantly, when to exit, because this is really the difficult part. There are loads of metrics here to help you with that. This is one of their new tools that helps me analyze the market better and spot the right entry or exit points. As you can see, it gives you a green signal when the market turns bullish, meaning we are in an uptrend, and the red signals indicate when the market has turned bearish. Thus, exiting positions and preventing losses becomes really easy with this tool. There are so many tools that you can use. Here's another one, the out-season Bitcoin season indicator, that gives me a very good idea if it's time to diversify into outs or should my focus be on Bitcoin instead. There is no need to be a back holder during a bear market. I think by now that much is clear. And with this tool, it's a no-brainer. They provide in-depth data and stats on all cryptocurrencies and a lot of new upcoming projects, launches, and token sales too. This is where I find unknown gems before they hit the mainstream, and I particularly like their emails with detailed breakdown on technicals and fundamentals on the projects that they research. You can also customize your portfolio and track your P&L day to day, and you can create separate portfolios for different exchanges that you use to monitor your progress in the most efficient way. There are so many categories to choose from when analyzing the markets, way more than I've seen on any data aggregator website, so you can really advance your analysis and improve your investment strategies. I've been a premium member of Token Metrics for the past 2 years, and I'm using it on a daily basis. They send us emails, host webinars and podcasts with technical analysis, and they go deeper into their research of new projects or current market conditions. I find this really helpful in my own market analysis, as they give me a hint to things that I might have missed or overlooked otherwise. They offer a trial period and you get a 10% discount and a free ebook with my link, so go check it out, it's in the description below. All right, well, let's start with the 4-hour chart now. First, we're going to look at the shorter time frames and then we're going to examine the longer time frames. By the way, you can see this gap here. This is because the Orox indicator was under maintenance for a few hours. So that's why we're having these gaps here. This is not an actual gap on the chart, but that doesn't really affect the TA here. So what's happening is, in my previous analysis, I was talking about a pullback possibly coming because we were quite overbought for some time. This is the pullback that we are already seeing. We actually managed to climb above the resistance level here of 31,000. We reached 31,400 pretty much. And then we started a small decline. It's still quite a small pullback. At this point, we're actually talking about something like 4% pullback from that local high here that we printed. We are using these moving averages as a support. Currently, the 21, this is the 4-hour chart, so the 21 4-hourly moving average is acting as a support, but this is not a strong support. We have also the 34, also 4-hour moving average. kind of somewhat of a stronger support. It's actually sitting here in a support zone that I drew previously based on Fibonacci levels. So this is definitely the zone that I'm expecting for us to come and retest before we make another push on the upside. So most likely to me is that over the next few days, maybe even tomorrow or something, we're going to touch and test this zone here at 30,000 and maybe even breaking a little bit below the 30,000 to 29,900, 29,800, something like that. This is what I'm expecting. Now let's take a look at the 50th moving average also, and that is currently sitting at 29,300. So this is as low as I would expect us to reach during this pullback. And even if we manage to get there, because I still see a lot of bullish sentiment, as the price is retracing here, as the price is going down, we see that also the volume is going down. This is a bullish indicator. It means that, people are not that keen on selling Bitcoin as the price is dropping. In fact, if anything, people are buying these dips right now. So if we continue this pullback, at the most, I'm expecting that we're going to come to 29,300. Now, this is a crucial level here because breaking below this level would mean that we are doing a much deeper correction. Something like 20% correction is to be expected if we break from this level. So 20% will actually take us all the way down to around 25,000. So it's not a guarantee, it's not even the most likely scenario, but it is a possibility. So I just want to mention that here. A break below this 50th moving average, a break below the 29,200 could actually take us all the way back in the 25,000 region. So it's important to monitor that level. It's important to see how are we going to respond once we come to that level, if we come to that level. Now, another thing that I noticed is that this move was a typical Elliott wave impulsive 5-wave move, and we exhausted that move already here. It was possible that we can extend it further. I was having this target here of 32,000, so it was possible that the fifth wave come all the way to 32k, but with this pullback right now, I feel that most likely we have exhausted this impulsive 5-wave move, and we have already started our ABC correction. So the A wave is most likely this one here. Then I'm expecting a B wave to come to about 30,900, something like that. And then a C wave most likely will take us to that 29,700, 29,000, even 500. This is most likely what we can expect. We don't actually have to come all the way down here with the A wave. It could be this here and then a bounce on the upside. So it could look, something like that. Or even the B wave could actually just come here to this previous highs of 30,500. And then we can do a slightly lower C wave, which could also just end here. It doesn't have to extend all the way down to that 50th moving average. By the way, that 50th moving average would have moved as well. And this could look a little bit different if we go on the daily. So let's do that. So yeah, let's zoom in. And this C wave here could actually just take us to around 30,000, to the bottom of my buy zone here, of this support zone. And if we don't break this support, and especially if we don't break this here, the 29,300, then we are good to continue our bull rally, and we can challenge the 32,000 and the 34,000. And as you know, my next target is at 38. So this, and of course, I have a higher target of 41,100. This is really, this bull run for me, this is where we're going. All right, now looking at the slightly longer term, this is the 2-day chart, and what I'm seeing here is stochastic RSI still in the overbought region, just about to print a bearish cross in the 2 moving averages. So still I'm expecting to continue this pullback. And this is the 2-day chart, so it is a slightly longer term. So over the next few days, I am still expecting that we are going to continue going downwards. Of course, a slight bounce on the upside, to complete a B wave here in this ABC correction could be part of this. Still, it's not going to change the trajectory of this stochastic RSI that much. The simple RSI is also curving down right now, so it's also indicating that we are continuing to drop, and over the next few days, over the course of this week, I'm expecting that this ABC correction that I'm talking about is going to play out, possibly going into next week as well. Let's look at the weekly, and here now we are starting to see the pullback here on the weekly as well. I'm expecting that this pullback could actually even take us to the 9th moving average. So it could be, if it continues more than a week, we could actually drop down and the moving average would have moved a little bit, but it's not unlikely after a strong push on the upside, as we pull back and we correct, it's not unlikely to come and retest this moving average and use it as a support. This is what we did here. As you see, we had this impulsive push on the upside. We continued actually for a few weeks to rally on the upside, and then as we pulled back, we actually came all the way down to this 9th moving average. For 3 weeks we were using it as a support, and then it finally gave up as a support. We went even below it, and then we started to try and recover this and climb back above it, and we managed to do that last week. So we could actually stay above this moving average for another couple of weeks or something, but eventually we are going to pull back to that 9th moving average. We'll see at the time where it would have moved. I'm expecting that it would have moved at least around here. So this is why I'm talking about 28 and 29,000 being a support level, because as we continue the pullback, we could actually find the support around this 9th moving average, which at the time it would have moved. So we'll see how this goes, but it is actually good news for us because this pullback is necessary. I'm not expecting it to be such a long and deep pullback as this one here. This was a pullback that took us around 20%. I'm not expecting another 20% pullback. If anything, I expect that this time it will be a much smaller pullback. Something like 10% is, quite a decent one, maybe 11% even. And if we are to actually find the support at our 9th moving average, this will be around 10% pullback. And this is if we do it right now, but over time, this moving average will go slightly higher. So we could be looking at a pullback of around 8%, 8-9%, not necessarily anything deeper than that. Okay, and a very quick look at the monthly. I don't often look at the monthly chart. This is one of those rare occasions. As you can see here, on the monthly, we're finding support at our 50th moving average, which is good. I mean, this is also an indication. Staying above this 50th moving average is an indication that we remain bullish on Bitcoin. And because we're looking at the monthly, we're actually talking much longer term, which is good news. However, the stochastic RSI is starting to get into the overbought region. And on the monthly, being in the overbought region is calling for a much deeper pullback. So it's not imminent. Of course, this is the monthly. It could take another month or even longer to actually get proper here in the overbought region, really enter above the 80 mark here. And then these two moving averages have to get close together. We have to see a bearish cross, something similar to what we've seen here. So as you can see right now, we are about here with these moving averages. And this was back in September 2020. So since then, we haven't actually seen these moving averages enter the overbought region. But then it took them quite a few months until they finally crossed. And this happened in February 21. So we're talking good 3-4 months here of price action until we actually managed to see that bearish cross here in the moving averages, and they started the decline. And this coincided with the start of the bear market as well. So the fact that we are starting to enter this It's still early days. I mean, we still have quite a lot of time to go until we enter the overbought region properly. And we don't even have to. We might actually see a curve before we go in the severe overbought region. So for the longer term, this, yeah, we could actually see something like that. We can enter this overbought region, and then sharply the blue line can actually curve and cross and print that bearish cross with the red line. And this is what happened in July. Let's just see what was the price action around these occurrences here and also here. All right, well, back in 2020, after we printed this bearish cross, we still continued rallying on the upside for another 2 months, right? Because this is the monthly, each of these candles is actually indicating one whole month. Then here back in August 2019, we printed that bearish cross. It was at the time we were already starting to correct. We were in the middle of a correction, and we continued that correction. So yet again, when the stochastic RSI goes in the overbought region, we are calling for a correction, and inevitably we see a correction happening. The good news right now is that we are still about to enter that overbought region. We haven't quite reached it yet. And as we enter that overbought region, we are also wanting to see that curve in the blue line to indicate that this up move has been exhausted and we are starting the correction. So that means that we still have another couple of months probably before we can look into a deeper correction. And I'm expecting that the price action will actually take us at least here to that 34,000, maybe even 36,000 range before we see a proper correction, a deeper kind of correction, a correction of something like 20% or something like that. If that were to happen, we could come from the 36,000, we could come all the way back to the 30K, back to where we are currently. But, this is far ahead in time. We don't have to worry about that right now. For the time being, we have to just focus on what's happening over the next few weeks and over the next month. And this is something that we analyze on the daily chart. So on the daily chart, yet again, we see that we are in the overbought region in stochastic and simple RSI. So certainly we haven't exhausted this pullback yet. I'm expecting that we are going to enter this zone here. This is the support zone. If this support doesn't hold us, I'm expecting that we can retest the 29,300 or 29,500. This range here, this is my lower support range. And even if this support is not holding us, I have another lower support at 28,800. It's not really far from where we are right now. We're around 30K right now. So, dropping by a couple of thousand is not really a big correction for Bitcoin. If anything, from the current price that we can look into another 5%, 6% correction. And this would be altogether from the high, the local high that we printed. This will be around 8% or 9% correction. This is a very standard correction for Bitcoin. So I'm expecting that this is a very likely scenario. All right, now looking at Ethereum, as we can see, Ethereum is also reaching here a resistance. And it's getting rejected from that resistance quite a few times already. This is 3 days, 3 times we have just touched this resistance line, and every time we get rejected. In the shorter time frames, on the 1 hour, this would look like a triple top formation here. So definitely a strong rejection from this level. This is the very close to the 2000. It's 1934. So for the time being, this remains our strong resistance. We are unable to break above this resistance. So of course, it is very likely that we will come to retest support. I mean, we've been trading within a very tight range here over the last few days. From 1928, this is our high, to around 1870. This is really a small range. I'm expecting that we're going to come out of this range. Perhaps with the correction in Bitcoin, this would actually take us down to this support zone here at 1842. And if we are to find the support here, then we're going to make another attempt at challenging and possibly even breaking this resistance here. but it's also possible, if with Bitcoin we have a deeper correction, it's also possible to go to our lower support, and this is currently sitting at 1811, and we do have a lower support at 1783. So these are the support zones on the way down during this correction here. Even though we are not really seeing a correction in Ethereum, it's more of a consolidation. But as we see a correction with Bitcoin, a pullback with Bitcoin, inevitably we're going to experience a pullback with Ethereum as well. And if this pullback is to happen, these are the zones that I'm looking on the way down. Now, another thing that I want to point out is that the price has been going up here over the last few days, but the volume has been dropping. And this is actually quite indicative that this momentum here is exhausted and that we are no longer having that much strength in the buyers. So the bulls are kind of getting weaker and weaker, and very soon the bears are going to take control and they're going to push the price down. This is what I'm expecting for Ethereum. Look at the stochastic RSI. It is in the overbought region. It's printing a bearish cross and it's now starting to go down. So I'm expecting that we're going to see more of a drop here. This consolidation, this bullish momentum here has been exhausted. So a drop to the 1844 and then possibly even 1810 to me looks like the most likely scenario. All right, now I'm going to look at Chainlink, a coin that I haven't actually analyzed in quite some time. And today is that day. Let's look at Chainlink because this is another token that I'm quite bullish on. This is one of the very few tokens that I actually keep a stash for the long term. And it's sitting in Tangem wallet right now. And it's going to be sitting there for quite some time, possibly over the next few months. I'm not planning to sell Chainlink. In fact, I will be using any dips to accumulate some more. And if we actually fall below the $6 mark, it's going to be ideal for me. We do have that double bottom here that is bullish for us, but at the same time we have reached now a overbought stochastic RSI, so we are in the overbought region, and both stochastic and simple RSI are starting to curve on the downside, indicating that it's very likely that we're going to drop below that $6 mark. And this is going to be great news. I mean, for me it's going to be great news because I'm looking to accumulate some more Chainlink. Now, a drop here to the 9th moving average is the most likely scenario, that is sitting at 586. But if we see a deeper correction in Bitcoin, then of course we're going to expect a deeper correction in Chainlink as well. And if that is to happen, let's just see where else do we have support. So according to Fibonacci levels, we can expect support here. Actually, this is the 0.382 Fibonacci level. It's sitting at 579, and we do have a lower support, 0.50, sitting at 560 right now. And another lower support is taking us all the way back to 542. This is the golden Fibonacci ratio here. I'm not sure whether we will be able to reach that low, but if it does, this will be ideal. So on the way down, during a pullback, these are the three levels that I will be watching closely. Now, being in the overbought region in the stochastic RSI on the daily is most certainly calling for a correction. It could even be a deeper correction. So I will not be rushing into buying just yet. I will first see how we respond once we reach these levels. And if we are breaking this support level, I'm not going to be buying at that support. I will be waiting to see if we're going to reach the lower support. And then if we are breaking this lower support, again, I will not be buying. I'll be waiting to see if we might be bouncing from this support. And if I see that we are bouncing from this support, then I'm going to enter, but I'm not going to rush into buying during the downwards trend. I will be waiting for a bounce, from this trend. So once I see a bounce from here, then I will be buying, but not during the drop, because during the drop, I could be buying here and then we go to the lower support and then I'm buying here and then we go to the lower support. So I might be placing some very small orders at these levels just to, scoop some. But of course, the bigger amounts I'm buying after a confirmation, after a bounce, after we actually establish this as a support, we confirm that it is a support, and then I'm buying. So, if something like that is to happen, I might be waiting for that bounce from this level here, a retest, a confirmation, at which point I'm actually buying, and then we continue to go upwards. This is the ideal scenario. This is how I'm going to play this. Of course, I'm not saying that you have to do the same, but this is how I usually operate. And we also have to take into consideration the weekly, because of course I'm talking here longer term for Chainlink. I'm not looking into what's going to happen over the next few days, but over the next few weeks. And the weekly is still bullish. So a minor correction, a pullback to these support levels is going to present a perfect buy opportunity before continuation of this bull trend and challenging the highs here, the resistance, which is currently sitting at $8, $8.20 or $8.12, whatever it is. I mean, of course, it's going to take some time to get there. And with time, we can see that the 50th moving average is also moving downwards, so it would go a little bit lower. So we could find our first strong resistance here towards this moving average, which if it moves down and it comes to around here, 752, that could be our first resistance. But on the way up, we don't really have any other strong resistance levels. So on the way down, I have these support levels here. On the way up, I'm looking into the 750. This is the resistance that we are chasing right now. All right, and let's take a look at Cardano. This is the daily chart. We actually see this bearish cross here. This is the death cross, in fact, because we're talking about the 200 and the 50th moving averages on the daily. This is not good news for us. It means that we are going to continue this drop here. I mean, we just printed this bearish cross a couple of days ago, so we still have a lot more time for this to play out. And even though we've had, a bit of a rally here, a quick recovery from the lows of 26 cents, we are currently at 29.40. I'm expecting that we can continue this drop. Yet again, we can actually fall into this support zone here, and the 26 cents it's currently holding as a support, but I'm not sure whether it will be holding. We are in the overbought stochastic RSI on the daily, and we have already printed this bearish cross. So definitely we are starting right now. We have started already, but we are really in the early days of a much deeper pullback that I'm expecting here for Cardano. So on the way down, we can expect a first stop, first support to be around this level here, which is 27.58. And then the lower support is 26.12. Let's actually take a look at Fibonacci levels and see what they are showing us here. And there we go. So we have this support level here. We have a lower support level around this zone, and then of course we have a support where we previously found our lower support. So on the way down, these are the three levels that I'm watching and that I'm expecting for Cardano to reach. However, I'm not really trading Cardano at this point. I'm not really interested in Cardano because I feel that this court case with the SEC is going to drag on, and Cardano, BNB, Matic, these are tokens that are going to continue suffering. Solana is another one. All of these tokens were mentioned in that court case. So just like with XRP, for a couple of years, XRP was really low. It's still very low. XRP is still struggling. And the same is going to happen with these tokens, unfortunately. So even though we are going to come to these support zones, they are not buy zones for me. I'm not going to be trading Cardano. For the time being, I'm keeping away from Cardano. Let's take a look at Render, another token that I'm actually trading right now, as I exited Cardano and Matic and Solana and a lot of the other tokens that I was trading. I started accumulating more Render because it has a very strong performance, really good. Look at that performance over the last few months. I mean, this is the daily chart, and we see higher lows and higher highs all the way. So even though for the first time here we printed a lower high, this is still a minor correction compared to many of the other tokens. So it's got a it's built a very strong momentum, and it keeps holding this momentum. Now for the first time in a while, in a long while, we are actually breaking below the 50th moving average. So we have to worry about that here. And we have this bearish cross here in the 50th and the 9th moving averages. So we are failing to climb above this 50th moving average, which is not great. I'll be watching closely the price action over the next few days. If we manage to climb above this 50th moving average, it's going to be good news. We are opening the door to continue the rally and to go and challenge yet again this resistance here at 272. A failure to break above this 50th moving average is going to send us yet again to that support zone here at 181. Currently, this is the range. We are trading between this range. It's quite a high range actually. It's not a tight range as we saw with the bigger coins like Ethereum had a very tight range, and Bitcoin is also in a tight range. Here the range is actually much higher. We are talking about 30%. This is the range. 30% is great volatility, scooping here in the lower zones of this range and then unloading at the higher zones of this range is great for us. As long as we keep above the previous low, which is here, as long as we drop to perhaps 196, or even if we drop to around 190, but if we bounce from there, then we're going to continue this bullish momentum here. We're going to confirm that we are actually in a bull trend, and even though it's more of a consolidation, it's actually opening the door to continue going higher, challenge this previous resistance, and then perhaps even breaking this resistance and going on the upside, into new highs. So this is what I'm looking for. I'm monitoring these levels here. If we even drop to this low, but we don't break below it, this is still good news. So this is what I'm looking for. I want to see us possibly retesting this zone here. This is the first zone that I'm expecting for us to test here and to bounce up from here. But even if we don't bounce up from here, we could come and retest the lower support at 180 and then bounce on the upside. So this is what I'm expecting from render, and I'm going quite heavy on render in fact, because it's showing me a much better performance than many of the other altcoins. I'm liking the performance of render. Look at that. This here in the shorter term, we are actually having this upwards trend line here. This is the support trend line, and in the longer term, we're having this upwards trend line here as well. So as long as we don't break any of these two trend lines, we are still continuing the bullish momentum. And this is a bullish momentum that we have been building since March this year. So it's quite a long-term strong trend here that has not been broken. It was challenged, but not broken. So as long as we keep this trend, I'm running with this trend. So for the time being, we are in an uptrend here with render, one of the few altcoins that is actually in an uptrend. And lastly, let's take a look at Litecoin, because as I said in my previous analysis, we are now just 1 month away from its halving, 40 days away from its halving. And with its halving, I'm expecting that we're going to see a lot more pumps and a lot more volatility, which will be good for us. Well, it was actually following my charted. This is what I charted back in 20th of May, and up to now we are actually following that. I mean, first we went upwards, even though I was expecting for us to drop, but eventually we did that drop. We came to the support level here in the 73 region, which is what I expected, and from there we bounced on the upside. Now we have kind of exhausted this bounce on the upside with Bitcoin and Ethereum as well. So we are seeing this pullback. Currently, this pullback is finding support at the 50th moving average, and we're having this bullish cross with the 50th and the 9th moving averages, which is good. Unlike many other coins, we are actually managing to hold above this 50th moving average. So this is good news for us. But this pullback has just started. We still have more time for this pullback. As you see, the stochastic RSI and the simple RSI are both in the overbought region, so we can expect a further downwards price action, and if that is to happen, we're most likely going to break below this 50th moving average. So I will be watching this level quite closely. This is the 85 level. $85 is a support, but we have broken this support so many times that it's not really a strong support. So, and if that is to happen, we are going to confirm a short-term downtrend here, because as you see, we have actually printed a lower high here from the previous one, right? The question remains, are we going to print a lower low than the previous one? And I feel that we're not going to print a lower low. At worst, I'm expecting for us to come to the $80, which is a much stronger support than the 85. So retesting the support at $80 is something that I can expect here for Litecoin, and then a bounce on the upside from here and a continuation of the uptrend, especially with the halving coming. I really want to see Litecoin coming above the 100 mark. 120 even is what I was expecting to see, but at this point I'm not really sure about the 120. I feel that in a month's time this halving is quite close. Usually around a couple of weeks before the halving, we see a lot of selling pressure. Many people start unloading, the ones that are trying to sell the news, to sell the event. So if this is to happen, then we are not going to see Litecoin reach 120. But reaching 98, 100, and perhaps even this previous high here, where is it, at 102, 103, 102, maybe even breaking a little bit above it. This is a price action that I'm expecting from Litecoin over the next few weeks. Alright, well, this was everything for today's episode, guys. Thanks for staying until the end of the video. I hope this technical analysis is helping, and if you have any suggestions for other coins that you want me to analyze, drop them in the comments below. Also, don't forget to leave a like, show your support, and check out the links in the description below, where I drop the links to all of the crypto services that I'm personally using and that I recommend to you. And while you're here, just pick another one of my videos, and I'm gonna see you there.